so nice to see so many old friends and some new ones on the screen. It does feel like forever since we've been together in a real room. So looking forward to that very shortly. Simon asked Brooks and I to have a chat and share some of our observations and thinking about the property sector. And when he was asking us what we should call this, and Brooks and I said, well, it's kind of like the puzzle pieces have all just been scrambled on the desk, and the puzzle that was beautifully assembled and working so efficiently and looking lovely has just been completely torn topsy-turvy. And so that somehow stuck for a name of our conversation. And so we thought of this as really scrambling the puzzle pieces. And so what do we mean by that? And I'll say a few words and then get into conversation together with Brooks. But really, perhaps stating the obvious, the world's been turned upside down, and I guess I would highlight, rather than kind of reinforcing the obvious, to say that actually there's quite a dispersion of views out there. And if you were to type into Google, death of the office, I think you would probably find as many articles about the death of the office as you would about the death of the office being overstated. And on the one hand, we have this work from home phenomenon, but balanced with this deep, penetrating desire to come back together physically in person. We have this unprecedented flexibility given back to us in our own lives and how we work and live. And yet this feeling that somehow the guardrails have come off, and that's unsettling, and we're not really sure what to do and how to respond. Again, this notion that people are leaving cities in droves, but in some other people's views, this idea that perhaps this is foreshadowing a golden era for cities and golden era for architecture, as we have the opportunity to really reset and recast what cities look like and what we do in them and what they're for. And so I think this is quite an unsettling time period to be an investor in real estate. And remember now, when you think back to the days when you were taught about the purpose of real estate in a private family, it was always about this ballast. It was this constancy. We did some studies a while back that showed over a 100-year period, real estate had only 4 years where it had a negative return. And we valued long leases and tenants with great credit quality. And now that's, again, been turned totally on its head. Tenants value flexibility. They value agility. They value shorter leases. All the things that it's the antithesis of all the things that we once thought that they once valued. So really, it's a sector that's been turned on its head. And so how should we think about it in sort of 17 minutes or less? So maybe with that as a framework, and with this notion that it's not all as bad as it seems, nor is it probably as good as it seems. And with so much volatility and upheaval, Brooks, in the sector, what are you guys doing? How should we think about real estate in the portfolio, and how are you approaching the sector?
Yeah, that's a great question, Basil, and thanks for the introduction. I mean, I think if you have to sort of peel back a little bit the onion and look at the specific real estate assets that you're potentially going to invest in. And what I mean by that is that things are moving very differently right now. And so when you're looking at last mile logistics because of the rise of e-commerce, that's a very different risk profile than a hotel today, obviously, or maybe big box retail. Residential versus student housing. What are the risks associated with each of those? Where are you from a residential perspective in terms of income resiliency? So are you ultra luxury, middle income? So I think yes, there's unprecedented volatility and complexity. I think one of the things that we're focused on is that all real estate seems to be becoming more operational. And what I mean by that is, even in an office, and maybe Basil, you can talk to this, offices used to be long-term leases, a bit sleepy. You signed up a couple big tenants and you called it a day, right? And you came back in 10 or 12 years and hopefully they were going to renew. I don't think that's what an office is going to look like going forward. So maybe you can talk a little bit about how your office investments are becoming potentially more operationally focused?
I think that's right. And as I said, tenants are valuing, abstract thinking and agility, and on a more profound level, meaning and agency. I always kind of frame our thinking in terms of, Maslow's hierarchy of needs. At the base level, we provide shelter, but at the top, we're providing fulfillment and self-actualization. And I think that's part of that is offering service. And we saw in a flex space, for example, or co-working rise over the last decade, and some have thought that the pandemic would put these guys all out of business, but actually it turns out that they're some of them are, and the ones that are right positioned are doing extraordinarily well. We tried to look even for ourselves. We did some secret shopping over the summer. We found that actually prices were stable or even rising at many of these co-working places. So I do think we'll see real estate as a service, much in the same way that other infrastructure heavy asset classes have, like hotels with Airbnb and transportation with Uber and the like. We've moved to this asset light service as a software as a service, or service generally led economy. So I think that's really where we're going. In terms of the office, I think we've been on a trajectory for really the last 30 years where use of office space has become much more efficient. Just on efficiency gains alone, we've lost about 40% of the demand for office space in a city like London, which is hard to believe. But we've gone from something like 150 square feet per person to around 110, 115 square feet per person. So this densification of the office space, and as we've recast how we work in the office, from closed office, cellularized offices to cubicles, now to open plan. All of that has increased the efficiency of the office and has effectively sucked demand out of the market. And yet, at the same time, over that same 30-year period, we've added in London about 15 million square feet of new stock. So I always find that's like a bizarre paradox. So, like, where is all that demand coming from? So I think part of the answer is that we have been on this trajectory where office space is falling out of demand, and we'll be in maybe stepwise fashion that where we are now. But I think ultimately we do want to come back together, but without question in a much different type of office, which is, as you suggest, much more service focused. And I think on the same front, you guys do a lot in student housing, and I always think of student like hotels or care homes or old age. There's a bit of service element to that as well. You've got this short-term age. Is that an area where we should be focused on? Do you continue to like that? I mean, obviously students aren't spending much time at school these days, but eventually they'll go back.
I think they're desperate to go back, and I'm sure their parents are desperate for them to go back. I think, look, the way we think about it is that student housing has always been a bit of a service business, in the sense that you have to create an offering that the students are excited about, whether that's happy hours or local tours or amenities that they can use to study or play. So I don't think student housing has changed much. What I would say, and I think this holds for all the asset classes, is if you believe that there's demand destruction sort of at the tier 3 quality of a lot of things, call it hotels, call it retail, maybe even office space. I think that holds for students, right? Because if you believe that a lot of students can go online and consume some proportion of their learning online, then by definition, you don't need as much physical infrastructure to service that number of students, and therefore they don't need to be on campus or near campus quite as much as they used to be. And so I think it's really important to be focused on the better stock, the better universities, because the better universities are going to be the winners. So I think it behooves us across all asset classes to really think about the quality of what we're investing in. And that sort of leads me into a question for you. If we believe that business travel demand is going to go permanently depressed by, call it somewhere, I've seen numbers as high as 40%, but let's say business demand travel gets depressed by 20%. That's still a significant amount of demand destruction because of Zoom and teleworking and so on and so forth. Where does that create opportunities for hotels in your mind and in your sort of potential investments?
Yeah, I think it does. I think I wouldn't want to really be owning a Center City, a kind of business traveler focused hotel. I mean, I think we all feel anecdotally that we're not going to hop on a plane to go for a day trip or 2-day trip to Berlin just for a speculative meeting when it can be done in an hour-long Zoom call pretty much just as effectively. So I think it does, and I think it's like, what do you convert that into? Could it be resi? Could it be student housing? Could it be something much more experiential? Could it be maybe it's, I don't know, theater or cultural based, or could be anything. So I think it does present some interesting opportunities, but I think it's always got to be right located and the right class of assets, because I do think some of those assets will be completely stranded at the end of the day, and will be obsolete. There will be some permanent demand destruction. Having said that, I think, again, coming back to the other obvious one where people are worried about demand destruction is offices. I think it's probably almost less obvious with offices, and the statistics that we've seen is somewhere between a 10, 12, maybe 13% one-time vacancy hit in offices, and but it's not nearly as dramatic as a practitioner on the ground, and from the data that we've seen, it doesn't appear to be as dramatic as the headlines would suggest. But I think for sure for hotels, I think that would be an area where maybe there's some opportunity. So other than hotels, student, logistics, everyone talks about e-commerce and the rise of e-commerce. Is that creating opportunities that you guys are looking at as well? I mean, high street, that's completely decimated. Would you think it's a good time to be picking up some slack assets on the high streets of Great Britain?
Well, I guess there's two parts to your question. I mean, I think we have looked at a lot of platforms on the last mile logistics, e-commerce sort of side of the world, because everybody's moving that way, and Ocado and service providers like Ocado are growing incredibly rapidly. I think the issue there is with the rates where they are today and demand for those types of assets, we can't figure out how to invest in such a way that the return on our capital makes sense or meets our hurdles. And so I think the crush of capital trying to get into that has made it less interesting. Doesn't mean we won't keep looking and keep trying, but it's hard. It's very hard. On the retail side and the high street side, I think there's an opportunity to I think look at assets and potentially try to reposition them. And whether it's taking a high street building and popping residential above it, or repurposing a couple of the upper floors of retail and leaving just the retail on the ground floor. I've seen some things around that. I think you have to work on what those rents are for that, that shrunken retail footprint. But if you can put residential above, I think it gets very interesting. The other argument you could make is that maybe people don't want to go into central London for every single meeting or go into central London for their daily commute, and they want to walk down to the high street where they have a little serviced office above what used to be retail, but now it's a little serviced office where they can have a boardroom, they can be away from the kids and the dog. And the commute is kind to them. So I think I absolutely think, and people are more afraid to touch that stuff than they are, last mile logistics, because your IC committee is going to say, oh, let's do last mile logistics. Everybody's doing it, right? There's the herd. Let's go follow the herd.
Yeah.
But on the high street retail stuff, that gets interesting. The pricing is interesting.
Yeah, I think this new localism, isn't it? I think if one of the consequences and enduring consequences of the pandemic certainly has got to be a newfound sense of community.
Mhm.
And I mean, I know just again anecdotally, we spending so much time around the home, I've discovered new things and new neighbors I never knew, and new shops and so forth in our neighborhood that had always just walked by on my way to the West End. So this new
Sure.
localism, I think, is actually a really interesting idea. It's quite granular, as you say. It's like real bump and grind kind of stuff. You're renting out you know, a 500 square foot shop to a convenience store or a restaurant or something, and it's really hands-on, asset management in that regard. So can be tricky. And so as an investor, do you feel like I mean you obviously are a significant size as well, so you've got a lot of capital to put out. Do you feel like you're you're equipped to get into that level of granularity and to do, I mean, deal by deal, or do you like to do it with partners, or do you think that funds actually are still a good vehicle for you to go into?
Yeah, I know that's a great question. I mean, I think we play up and down that spectrum. So I would say we're vehicle agnostic. We do less on the funds, but we still do funds for sure because it gives us access to world class investors. Where you potentially could hoover up stuff like that is in a programmatic joint venture or a programmatic club deal where you say, look, we want to go buy 20 or 30 of these really little things, and we'll do it very sequentially and very quickly, but we'll put the box around it so we know exactly what we're buying. And I think that's how you can attack those granular assets. Find a team, find a group of like-minded investors, and then just go stamp it out quickly. I don't think you can spend a lot of time underwriting every single asset and fighting about it and figuring it out, because if the gross asset value is 4 or 5 or 10 million pounds, it's not efficient, right, from a capital deployment perspective. So I think that's those programmatic joint ventures with very tight investment parameters, but then you can hopefully get volume done.
Yeah, a bit of a beta trade as much as an alpha trade.
Sure, absolutely. I think you're going to be wrong on a couple of them, but if you do 20 and you're right on 15 of them, then I think you'll come out ahead.
Cool. We should talk about just in the few minutes that before we turn over to Q&A, maybe ESG as you know, Brooks, ESG and sustainability is such an important part of our strategy here at the business I run, FORE Partnership. Our belief is that it's part of a new paradigm, this new economy that is tech led, but also green, driven by green and some big macro forces that we're seeing here. And we're seeing, some people call it the fourth industrial revolution, again, technology driven, and this decarbonization of the economy that we've seen. We feel like it's accelerating, and we feel like as an industry, real estate is incredibly sleepy, very backwards looking. Of course, you're dealing with assets that sit there for long periods of time and you don't do anything to, so necessarily there's obsolescence that's built in. And yet at the same time, every other industry around real estate is transitioning or has transitioned to a low carbon economy. And we find when we talk to our tenants and occupiers that they're in this sort of existential crisis. On the one hand, they're being told that they need to reduce their carbon, asked by their staff and their customers and shareholders and stakeholders, what's their pathway to zero carbon, and what does a zero carbon future hold for them within their strategy. And then at the same time, they're being asked, now, and so what's your purpose? What's your purpose as a firm? And what is the social value that you create? And for an MBA trained or educated CEO of a FTSE business, these are kind of unusual questions to be asked. And so we find there's real value in our portfolio to offering them these solutions. And on the one hand, they can come into our buildings, turn the key to net zero carbon building, they reduce their carbon footprint dramatically. And similarly, we're running social programs in our buildings to help them deliver a purpose, a social purpose to them, to their staff. I mean, do you see that in your work? And you talked a lot about different asset types, and be it student or high street or whatnot. Is this a pervasive theme, or is this something that's a fleeting moment?
No, I don't. No, I certainly don't think it's a fleeting moment. And I think people really do care about the built environment, and the built environment where their employees, sort of work and spend so much of their time. So I don't think it's a fleeting moment. I think it's a trend, and it'll probably accelerate. And I mean, you and I have talked about some of the competitive advantages that you have in leasing some of your buildings, right? I mean, maybe you can talk a little bit about one or two of the things that you've done in some of your more recent buildings, like, green walls, fresh air intake, those types of things, yoga rooms, bike rooms. I mean, those things matter now, especially as people do question, do I have to go into the office? But maybe you can talk about one or two competitive things that you've done to address that.
Yeah, it's yep.
Just give us one example there, and then we've got a few questions here, so I'd like to get.
Yeah, sure, no problem. We'll keep it short. Yeah, it's super easy. I mean, even one example would be our building in Manchester called Windmill Green, where, believe it or not, it's an office building. We've let 50% of the space since April of last year during a pandemic. So 43,000 square feet, 3 separate tenants, within 50 pence of the highest rent ever achieved in Manchester. So people are always amazed when I tell that story. So they're like how did even people get out of home to go see it, let alone, and who are these people who are signing leases, and can I short their stock? But it's true. I mean, it's happening. We've let retail space. We've let at Tower Bridge Court in the last month. We've let a Florida building in Glasgow in December. So it's happening.
Good. Well, I have a question of my own, actually, which I wanted to ask just on Brexit, and whether Brexit still lingers in the property world, and whether London is still the viable destination for real estate investment that it was pre-pandemic.
So I was on a call with the Lord Mayor of London this morning, funny enough, and so I wish he was here, because he would probably spend the remaining time telling you, pounding the table for London. But interesting statistics. So 7,500 job losses due to Brexit in the city. That's E&Y study. So almost nothing. And there's 40 billion of capital lined up to come to London. And the third data point is that of a recent survey of international global investors asked about where they thought in Europe the best destinations for capital were: London number 1, Berlin number 2, Paris number 3. So,
okay, thank you very much.
Brooks,
do you have an answer for that as well?
Sure. I mean, I think the answer is that Brexit, from an occupier perspective, was a bit overblown. I think people shifted some jobs onto the continent to placate policymakers, and potentially lower costs a bit, so back office folks. But you're not getting a senior managing director from a global investment bank moving from London to Frankfurt and moving his family there. So I think London continues to win as a global city. We don't have any fears. In fact, we've got several development projects that we've invested with in London.
Okay. We've got several comments in from Thomas Brown in Texas, and Charles from in London. But I'm just going to go to Tim, if I may, Tim Downing, who was here.
Hey guys.
Tim, obviously you're also in the property world, so could you just expand on what you've written there?
Yeah, I just an observation, really. Good to see you, Basil, and Brooks, and everybody else as well. It's I look forward to having a beer with you all soon. It's just an observation. We do a lot of work in the regions and London, to be fair, as well. But we're working closely with public sector and institutional investors on repurposing the high street. And I'm pleased you mentioned the opportunity that the high street still offers. I don't think it's the complete death of the high street. I think if we can drive footfall back to high streets by using resi and using more local and above. Build to rent sector as well. That's something that we're heavily involved with. We're seeing a lot of investment into that, similar to how student used to be done or is done. So I think going forward, I'm quite excited about the high street. And look, I'm the eternal optimist. I always am optimistic about all of this, but I think the high street was going through this before the pandemic anyway, whereas the larger, more complacent stores like your Debenhams, your BHS, House of Fraser, that didn't have much of an offering, were going to the wall anyway. And obviously the pandemic speeded that up. But there is great opportunity for buildings like that to be repurposed for concessions like they always used to do. So smaller businesses renting off the actual landlord with some residential above. And we see that as really, really quite exciting going forward. So it's more of an observation, really, and I'm pleased that you brought that up.
I think when it's always dangerous when you talk in absolutisms, isn't it? The high street's dead. This is dead. That's going to succeed. It's always more nuanced than that. And I think and this dispersion of ideas and the scrambling of the jigsaw pieces that we kind of mentioned, I think it just makes a really fascinating investment environment, because you've got ideas really quite polarized, and someone's going to be right, someone's going to be wrong. And I think
we're doing a lot of work with food halls at the moment. So, you know, food halls are massive. We've got 6 of those on the go with old Debenhams in the UK, and really exciting where you know, local producers, easy in, easy out, are being supported by council from a grant perspective, and also by local people. And some of those, I think they're going to fly. Yeah, it's good. Anyway, thank you.
Yeah, I think, Tim, just a quick observation is the pandemic hasn't really redirected things. These are all trends that were in place, and they're just accelerating, right? ESG, the high street repurposing, last mile logistics. I mean, all of those things I think were already in play. Massive online learning, right, for students and universities. So the pandemic is just an accelerant to a lot of these trends. Yeah. I mean, I'm not sure. I mean, maybe hotels is the one where you sort of got caught, because that wasn't really a trend that I saw. But
I think even in the hotel market, what I think the whole market is service. They're my 3 things. Like in the old days, it was location. It still is, but it's service. If you can offer the right service as a retailer, you'll get customers. If you offer the right service as a student operator or build to rent, you'll get service. Same with office, same with hotels. Smaller hotels, off really laying it on thick with service, will win.
Yeah.
Anyway.
Thank you very much. And with one final question, there's a lot of chat in the sidebar here. So what I'm going to do is record that, and I'll send it out to everybody, particularly to you, Basil and Brooks, and maybe you'll be good enough to answer it. So thank you for contributing there. But just a final word, just because we're on the cusp now. Cam has written in about WeWork, and I forget what he actually wrote, but something along the lines of something along the lines of, you know, was WeWork right all along, and you know, is now a good time for WeWork to resurrect itself and to succeed beyond its original concept?
Well, actually, we had a deal lined up with WeWork that we ripped up probably 6 months before the pandemic, about a couple months before they were going to go public. So I'm not sure I'm a believer in WeWork as a company, but I'm definitely a believer in space as a service. And you know, I think that what we're seeing is that tenants that were saying having 50,000 square feet of space will now take, maybe on a 20-year lease, they might take 5,000 square feet on a 20-year lease. That's their baseline that they know they're going to have forever. Then they'll take another 5,000 square feet on a 5-year lease, and then they'll take the rest of that in the flex operator and the service provider that you have in the bottom of your building. And they're doing a lot more due diligence on who that is and what kind of space it is and what kind of values they have. So I think space as a service is definitely a hot area to watch, and there probably are a wide number of ways to play that we haven't even yet thought of.
Yeah, and I would just say that WeWork, there's nothing wrong with the WeWork business model if they've got the right rents and the right locations, and their valuation is 5 to 10 billion instead of 40 or 45 billion. You got to remember that there's the business model's been around for a very, very long time. Regis, which then morphed into its current incarnation. So space as a service around, it was a trend. Maybe that trend's accelerating with the pandemic again. But I wouldn't have invested it. I mean, WeWork was my favorite short at 40 billion. Unfortunately, couldn't short it properly given its private company status. But I think it's a decent business model. I think you just have to make sure you've got the right rents and the right service. And again, to Tim's point, service. But
yeah, well, thank you so much. That's definitely the message I'm taking away, is the real estate as service, because you've all three independently mentioned that, and that is that has been useful. So thank you so much indeed to all of you, and thank you all for joining us. We've had a tremendous group joining us today, so thank you for that. And we will be back, and we have a conversation next Tuesday. And I look forward to joining you then. Thank you so much, and bye-bye. Thank you.
Thank you.